Welcome back to my YouTube channel, and I'm AtaX, and on today's video we are going to be talking about liquidity. So if you're just coming across my channel for the first time, make sure you click on the subscribe button and you turn on my notification. So on today's video we are going to be talking about liquidity, right? So now we have types of liquidity, and when it comes to the forex market, and then liquidity is money, right? And it is the ability to handle transactions smoothly. Candlesticks are what indicates or helps us understand the market movement when the transactions goes on, right? So now, talking about the technical aspects of liquidity, we simply have the basic liquidity and then the advanced liquidity. And then the advanced liquidity. Right? Yeah, so I'm going to break everything down for you guys. Now, we have basic liquidity, which some of you guys know, which is an example of, like, we have the double top, which many of you guys know. And then we have the double bottom, and then we also have the trend line liquidity, which many of you guys know, or we can also call it order flow, which is an example like this, right? Because in the algo market structure, like I taught you guys on the last video, when markets move in series like this, right, it is a liquidity build up, right? And then in the algo market structure, I never explained a part where markets will move in order. Like, you see markets moving in order: higher lows, higher highs, higher lows, and higher highs, right? Because if market moves in this pattern, then practically everyone in the forex market will make money, right? But then this algo structure will tell you that once you see something like this, it's a liquidity build up, which some of you guys also call the trend line liquidity or the order flow liquidity. This is a liquidity build up. So I'm just going to put an X to indicate that that is a liquidity build up. Okay, let's use a text. Okay, I've seen what I'm looking for. Yeah, so this is just the basic aspects of liquidity. We also have the consolidation, which is something like this, right? You see the forest starts printing a build up, no specific direction, just keep on printing higher highs and higher lows, higher highs and higher lows, with no specific momentum or direction, right? Now, when you see something like this, it is called consolidation. It is also a liquidity build up, right? With no specific direction. That's your consolidation. Now, this is just the basic liquidity, which we all know. Now, when we come to the advanced liquidity, we have the advanced liquidity labeled on different dimensions, and I'm just going to keep it simple for you guys, right? Now, under the advanced liquidity, we have the external liquidity, and then we also have, let me make this small, and then we also have the internal liquidity. Let's use an arrow. Sorry, I'm supposed to use this instead. Yes, let's use an arrow facing down. And then we also have the internal liquidity. And we also have the internal liquidity, right? Now, this external liquidity has its own parts. It has its own parts. The internal liquidity has its own parts too, right? It is being labeled in different dimensions. And when we have the external liquidity, we are talking about, okay, let me use something bigger. Okay, let me just use this, right? All right, so when we talk about the external liquidity, we are talking about the sessions. Sorry. When we talk about the external liquidity, we are talking about the swing points. Sorry for that mistake. The swing points. So if you watched my last video on market structure, then you shouldn't get confused at this point, right? We have the swing points, and then we also have the highs and low. I'm still going to give you guys an example of what I mean. And we also have the highs and lows. All right, so when we talk about the internal liquidity, we are talking about the substructure. Let me clone this. We are talking about the substructure, and sessions, right? So sessions is a very, very different topic in total, but I'm still going to get there, and that is why we have liquidity part 1 and liquidity part 2, right? So I'm still going to go to that part, but I'm not going to shift from the focus of these basic aspects. So we have the sessions, and then let me just clone this. So now, the whole algo market structure, let me give you an example of this external liquidity, the swing point, the highs and low, and then the internal liquidity, the substructure, and the sessions, right? But on this video, I might, because sessions is a very different topic in the aspect of liquidity, so I'm going to keep that aside and then explain the swing points, the highs and lows, the substructure, that's in the aspect of the external liquidity and the internal liquidity. So let's go over to this place. Now, when we talk about the external liquidity, right, in your uptrend you have something like this. Sorry, let me start from here. We have something like this. You have something like this, something like this, right? Sorry, my drawing is not always going to be perfect. And then this is identified as your uptrend, and then you have your higher low, higher highs, higher low, and the higher highs, right? And then these points are your external liquidity. That's your swing points, your external liquidity, right? From here to here, your swing points and external liquidity. An external point, I can also call it an external liquidity. From this point to this point is your external liquidity. Now, like I said, I told you guys before that this whole pattern looks like a liquidity build up to me. The algo market structure will not always give you this aspect of higher highs and higher lows. When we come to the algo, we will always have something like this, and then we have a sweep. Okay, sorry, let me draw this again. We always have something like this, and then I don't know why my drawing is not always perfect. Let me come again. We always have something like this, and then the market sweeps this low, and then breaks structure again, and then creates another B leg, right? And then breaks structure again, right? Then comes back to take this leg out, right? To go up to the upside, right? Now, how do we identify our swing structure? Remember I told you guys that in the algo market structure, you always want to anticipate the B leg to be taken out, which is this, right? Now, let's say we want to give an example of this external liquidity, right? Now, in your normal algo market structure, you have something like this, a sweep, and then something like this, right? Whereby here is your swing point, and here is your swing point, right? Which is also your external liquidity. Then this becomes your external liquidity, right? But you can also call it your swing point. This is your swing point, right? And then you expect price to come back and take out this leg, which is your B leg, right? Then move to the upside. You can see that the market moved from this external, and then we came to the internal, you can also call this as your internal liquidity, but I don't want to go there right now. I'm still explaining the external part of the liquidity, right? So this point is your external point. Your swing points are always your external point, right? Because you always expect the market to take it out, right? So this point is your external structure, right? From this point to this point is your external structure, right? Now we can also have a scenario like this. We can also have a scenario like this whereby the market does something like this, and then creates a leg, a B leg, right? And break structure, right? Now when it's break structure, you're expecting this leg to be taken out, right? But then you see something like this that takes out this low, right? Now when it takes out this low, I think that this becomes an external liquidity, and this becomes the okay, let's just say this in total. If you see something like this, then you can see that the market moves from this external, because the only thing that will cause such is maybe practically a trend change, right? And now when you see that trend change, you see markets move from external to external. That is the only time you can experience a change of trend. You see the market, it takes out the external and then takes out that protected low, which is this, right? It takes it out, telling you that the market wants to change trend, and then you can see that it's acted as our external liquidity or external structure, right? Now to continue the trend, you would want to see markets do something like this, and then take this leg out before going down, right? Now when you see something like this, right, you can see that this acted as your external, which is your change. You have confirmed your change of trend, right? And then it's created another leg which can also serve as your B leg, just like I taught you guys, right? And then you can see that our next external liquidity becomes this high, and then this high, this low, right? That's your external liquidity. So you always want to expect market to take out this high or this low as an external liquidity, kind of like an exit. External means outside and internal means inside, right? Now I think with this explanation, you should be able to understand that every structure break is an external liquidity depending on the direction. So if you are in an uptrend, this structure being broken are the external liquidity, right? Now when we talk about the internal liquidity, right, we are talking about I think I've explained the swing, which is this, right? Your swing point as your external liquidities, and then your highs and low, because it's almost the same thing. I use this as an example. I use the normal trend, which is like a downtrend or an uptrend, to explain your highs and low, right? This is your external liquidity. Right? You expect market to come up here again and break, and this becomes your external liquidity, right? Now I'm going to explain when it comes to the algo structure. The algo structure gives you something like this, right? This is a downtrend. The algo structure gives you something like this. Takes out the B leg, continuation, whereby this becomes your next swing high, right? Or your next swing lower high. You can call it your next swing lower high, and then you want to expect the market to create another leg, and then this becomes your next swing lower low, right? Now from this point to this point are your external, which are your outside, that's a liquidity that has to do with outside, right? So if the market decides to do something like this, then you can see that our external liquidities has been taken. This swing lower low has been taken, which is your external liquidity, right? Now when we talk about the internal liquidity, it is almost the same thing. Now, but where it is very, very different is that the internal liquidity comes with the substructure. Let me give an example. It comes with the substructure. It comes with the substructure and then sessions, but I'm going to explain sessions in a different part. Right now, when we are talking about the substructure, remember I told you guys in the basic market structure that on every swing structure, it is made up of the substructure. On every swing structure, it is made up of the substructure, right? That's on every, let's just say this is an uptrend, right? This is a downtrend, right? Now you would want to have your substructure look like this. You would want to have your substructure, that's the smallest price movement within these swing structures, right? Now when we're talking about external liquidity, right, I explained to you guys that, for example, in a downtrend like this, right, you would want to see internal structures, which is your substructures. That's those structures that are made up the swing structure, right? Now the algo market structure will show you something like this in a downtrend. The algo market structure will show you something like this in a downtrend. My drawing is not always going to be perfect, but I just hope you understand where I'm going, right? And now you have something like this, right, to take out this B leg, right? Now this is where the internal structures comes in, right? You see this B leg being taken out, and then this becomes your internal structure, and then this becomes your next external structure, right? And now you would want to see the same thing repeat itself, right? You want to see the same thing repeat itself, right? And then this becomes your internal structure where the market takes it out and then continue the direction. Now in the higher time frame, it is going to look like this. In the higher time frame, it's going to look like this. I just want to give you an example so that you understand what I want to explain. In the higher time frame, you might see something like this, right? And then something like this. Meanwhile, if you go to the substructure, it is not like in the higher time frame. You might see it like this, right? But then when you come to the substructure, you see that something actually went on. There was something that went on that substructure that you are not able to see on the higher time frame, which is your higher time frame, like this example, right? Now in the substructure, it's going to look like this. And the substructure is going to look like this. You see something like this. This is your sweep, and then you will now see smaller price movements. This price movement, you are not going to see it in your higher time frame. This smaller price movement will just come maybe practically to an indecision candle here, and then take off and break this structure, right? And then you see price comes back. and then you see price comes back. So let me complete this leg, right? And then you see price comes back to take out that internal liquidity or internal structure, which you are not able to see on this entire structure. But on the substructure, this is what you are going to see as the price action. I don't know if you understand me, right? On the substructure, this is what you are going to see. But on the higher time frame, right, or the swing structure, you would not see it the same way. Why? Is because this is the higher price, that's the price movement on the higher time frame, and this is the price movement on the smaller time frame. That is why I said the internal structure always comes with the substructure, right? And then the sessions. So, but I'm not going to move over to the session. So now on this, you've seen that your internal structure, which is on the substructure, has been taken out, and then the market continues, right? Now you would also want to expect the same thing, right? Okay, sorry, let me clean this. Now you'd also want to see, because this has to be your external structure. Remember guys, I told you your swing points are your external structure, and then your substructure, that's the substructure print which was taken out, is your internal structure, right? And now you don't expect the same thing to happen again, right? Whereby this becomes your next swing point or your external structure, this becomes your next swing low as your external structure, and then this becomes your internal structure, right? On the higher time frame, you might not see it like this on the higher time frame because you are dealing with the internal structure, which has to do with the substructure. So you want to expect markets to come back and take out this high and then continue the direction. So now with this explanation that I just made, you should be able to understand the external structure and the internal structure, right? And on our next video, I'm going to move deep into liquidity, right? I'm going to explain the section aspects of the liquidity. Okay, I think on the next video I'm going to go details into the internal and the external structure on the swings, the highs and lows, the substructure, the swings, the highs and low, and the substructure, right? I'm going to explain deep and give you chat example on the second video. Then on the next video, after the second video, I'm going to move deep into session liquidities. So thank you for joining, thank you for watching this video to the end. I appreciate, and make sure you subscribe to my YouTube channel and turn on your notification for the next video. See you guys on the next video. Thank you.